Thank you for joining us at xan.com for today's daily market comment by Ref Boyetian. I'm Christina Marujas. The Bank of Japan ended weeks of speculation about a policy pivot and took its first step on Tuesday to move away from years of ultra-loose monetary policy. The Bank of Japan decided to widen the range of its target band on the 10-year yield from plus or minus 25 basis points to plus or minus 50 basis points. But far from signaling that this is the beginning of the end of unconventional means to lift inflation, the Bank of Japan is going out of its way to portray today's decision as a necessary step to make its current policy mix more sustainable. However, with Kuroda's term set to expire in April next year, investors are drawing the conclusion that the governor is paving the way for his successor for more substantial policy tweaks in the next 12 months. The yen shot higher across the board in the FX market after the announcement, as investors were taken by surprise by the timing. The dollar has crashed below 133 yen, whereas the euro and pound also fell by more than 3% versus the yen, while the Aussies and Kiwis' losses were closer to 3.5%. The euro and pound also edged higher against the dollar, whose post-Fed rebound faltered, even as Treasury yields rose for a second day. Equity markets are also struggling after the S&P 500 ended in the red for the fourth straight session on Monday. U.S. futures are somewhat more mixed today, but with not a great deal on the agenda, it's hard to see sentiment shifting drastically before Friday's PCE inflation numbers. In Asia, losses in Tokyo dragged the region lower as the Nikkei 225 index closed down by 2.5%. Meanwhile, Chinese stocks extended their losses amid ongoing worries about business disruptions from surging COVID cases and how authorities might respond to the latest outbreaks. Recession risks and the overall uncertainty are bolstering the safe haven gold. The precious metal is back above $1,800 an ounce today and approaching last week's 5.5-month high. Whilst the weaker dollar is certainly helping, gold's rebound comes alongside the uptick in bond yields, suggesting that investors are getting gloomier about the outlook on fears that the Fed and other central banks are over-tightening. Thank you for watching today's daily market comment here at xan.com.